Hello everyone, hi, welcome to the channel of Wall Street Mojo. Watch the video till the end, and also if you are new to this channel, then you can subscribe us by clicking the bell icon. Today we have a topic with us is the Greenshoe option. This option has been adopted by the investment banks during the course of what we call as, when they are underwriting IPOs or any of the company's details. So they take into account underwriting into consideration. Now, what exactly underwriting is all about is we are going to understand here. See, uh, when a company goes for an IPO, remember one thing: when a company goes for an IPO, they give the responsibility to subscribe the shares to the investment bankers. That you have to make sure that the security gets subscribed. Now, if things go in the opposite direction, then you will need to buy out. That is, if the investors don't subscribe, then you will have to buy. So there's some details here. Let's read that. The 12-year-old company pushed its expected price interval from 19, 21, 21 to 23 according to new SEC filing. So the company still intends to sell up to 11.5 million shares in its debut, in a figure that is inclusive of 1.5 million share Greenshoe option that is made available to its underwriters. No shoes. Let's begin with first. What is the Greenshoe option? See, the Greenshoe option is a clause. What is it? A clause that is used during the IPO, wherein the underwriters they get to buy an additional 15%. How much? 15% of the company's shares at the offering price. Right? Okay. Second, how does this Greenshoe option work? Well, the Greenshoe option is coined after the term the green shoe manufacturing that was first to incorporate Greenshoe clause in its underwriting agreement. See, this is how Greenshoe option works. I'll show you a step-by-step process. The first is that when a company, wants to raise capital for its future development plan, one of the ways it can raise money through an IPO. Second, now during an IPO, company declares an issue price for its security and announces a particular quantity of the stock it will use. Let's say 1 million securities at 5 each. Okay, 1 million security at 5 each. Now, in case of blue chip companies or a company with a very good background and statistics, it may also happen that the demand for such security goes uncontrollably up, and due to which the prices will rise. Okay. Third, secondly, the demand goes up. Actual subscriptions are way more than the expected. Let's say 5 lakh versus 1 lakh expected. So in this case, the number of the shares allocated to each subscriber comes down proportionately to two numbers, actual versus 10 expected. Got it? Okay. Fourth, now there is a gap created between the required price and the actual price, which is due to the unexpected nature of demand. Okay, for the security. So in order to control this demand supply gap, companies come up with the what we call as Greenshoe option. Right, they come up with the Greenshoe option. Now, fifth, in this type of option, the company at the time of its proposal for the IPO declares the strategy. It declares its strategy to exercise the Greenshoe option. Now, hence, it approaches what we call as merchant banker in the market who will act as a stabilizing agent. Now, at the time of the issue of the security, the stabilizing agent, they borrow certain shares from the promoters of the company, and in order to allow them to additional subscribers in the market, in the way that when the trading starts, the price of the security is not dramatically raised due to the demand and the supply. That was a 6 point. I'll go with the 7. So the money raised from the additional offering in the market are not deposited in any party's account. The money is deposited in the escrow created by the process. Now, once the trading starts in the market, the stabilizing agent can, what we call as, withdraw money that is deposited in the escrow account as per the requirement, and the purchase backs excess shares from the shareholders and repay to the promoters of the company. Finally, the entire process of lending shares by promoters and repay of the same after the particular time period by stabilizing agent is called the stabilizing mechanism. Perfect. So this is how the whole process works. Now let me take you to the next part, that is, what are the features of the Greenshoe option? See, the entire option, the entire stabilizing mechanism needs to be completed within how much? It is to be completed in 30 days. Or let me start with the first one. It is to be completed in the 30 days time span from the date of the listing of the company, within which he needs to borrow and return the required quantity of the shares for further process. So if he is unable to complete the process within the timeline and is able to return only the part of the total shares of the promoter during the time, the issuing company will allow the remaining shares to the promoters. Second, the promoters can lend up to maximum of 15% of the total issue to the stabilizing agent. So for example, if the total issue is supposed to be 1 million shares, then the promoter can lend stabilizing agent only up to maximum to 1,50,000 shares for allotment to excess subscribers. Now, the first exercise of the option was made in closely in 1918 by a firm that named as Greenshoe Manufacturing. So it is not known as the Stride-Right Corporations, and the option is also known as the over allotment option. So that's the case. Fourth, the Greenshoe option is a way to stabilize the price. The price stabilization is regulated and permitted by the SEC, that's the Securities Exchange Commission. So if the company wishes to exercise the Greenshoe option in the future, it needs to clearly mention the intricate details in the red herring prospectus, and it shall publish during the issue of the securities. Now, the stabilizing agents need to execute separate agreements with the company and with the promoters, with mention all details and about the price and the quantities and the shares to be listed, also mentioned in the deadlines of the stabilizing agent. Now, I'll talk about significance of the exercising the Greenshoe option. See, the Greenshoe option helps for price stabilization of the company market and the economy as a whole. It also controls the shooting up, of the principle of the prices of the company shares due to uncontrollable demand, and tries to align the demand and supply equation. Now, the arrangement is beneficial to underwrite, to the underwriters, who sometimes they act as a stabilizing agents for the company. So in a way that borrow the shares from the promoters at a particular price and sell them at a higher price to investors once the price goes up. So then when the prices tend to go down, they purchase shares from the market and return them to the promoters. This is how they earn profit. So this mechanism of beneficial investor, as well, it works in the way to stabilize the price and thus making it cleaner and transparent to investors, and helps them to make the better analysis. So the Greenshoe option is beneficial for the markets because they intend to correct the prices due to the increase in the demand, and is an incorrect measure for share price. So hence the company tries to direct the investors rightly by analyzing the other things rather than just only demand for the correct share price. So let me get to the conclusion to this. See, the Greenshoe option is based on the company's far-sighted vision, which foresees the increased demand for the stock or in the market, and it also refers to the popularity within the general public and the investors' faith in them to perform the future. And it gives them a very good returns. So this type of Greenshoe option is beneficial, okay, and to the company, underwrites the markets and investors and economy as a whole. So it is the duty of the investor to read the offered document before any kind of the investment for the optimum return. So that's it for this particular topic. So that's it for this particular topic. If you have learned and enjoyed watching this video, please like and comment on this video and subscribe to our channel for the latest updates. Thank you, everyone. Cheers.